Hey there, and welcome to today's video where we're going to talk about how to calculate the size of mortgage you can afford. Buying a home is one of the biggest financial decisions you'll ever make, so it's important to know what you can afford before you start shopping for a mortgage. In this video, we'll go over the key factors that determine how much of a mortgage you can afford and walk you through the steps to calculate your maximum home purchase price. When it comes to buying a home and getting a mortgage, there are a number of factors that will affect how much you can afford. These factors can be divided into three main categories: your income, your debts and expenses, and the interest rate on the mortgage. First and foremost, your income is the most important factor in determining how much mortgage you can afford. This is because your income is what will be used to pay for your mortgage payments, as well as all of your other expenses. Generally, the more money you make, the higher the mortgage you can afford. Lenders will typically use a rule of thumb called the debt-to-income ratio to determine how much mortgage you can afford. This ratio compares your monthly debt payments and housing expenses to your gross monthly income. The higher your income, the higher your debt-to-income ratio can be. The second factor that will impact how much mortgage you can afford is your debts and expenses. This includes all of your monthly debt payments, such as car payments, credit card payments, and student loans, as well as your monthly housing expenses like property taxes, insurance, and HOA fees. When lenders calculate your debt-to-income ratio, they will include all of these monthly payments and expenses. This means that the more debt you have, the lower your debt-to-income ratio will be, and the less mortgage you can afford. The third factor that will impact your affordability is the interest rate on the mortgage. This is because the interest rate will determine how much you will have to pay each month for your mortgage payments. A higher interest rate means higher monthly payments and less purchasing power. On the other hand, a lower interest rate means lower monthly payments and more purchasing power. When you are calculating the size of mortgage you can afford, it is important to consider all of these factors. By looking at your income, debts and expenses, and the interest rate on the mortgage, you can get a clear picture of how much you can afford to borrow. To calculate the size of mortgage you can afford, you will need to use a mortgage calculator. This tool will take into account all of the factors we have discussed and give you an estimated maximum purchase price based on your income, debt, and interest rate. Overall, when it comes to calculating the size of mortgage you can afford, it is important to be realistic and conservative. You don't want to stretch yourself too thin and end up in a difficult financial situation. By considering all of the factors that impact your affordability, you can make a more informed decision about how much mortgage you can afford and find a home that fits within your budget. Now that we've covered the factors that impact your affordability, let's walk through how to calculate your maximum home purchase price. Here are the steps. Step 1. Calculate your monthly gross income. To start, you need to calculate your monthly gross income. This is your income before taxes and deductions. You can find this information on your pay stub or by looking at your tax return. Step 2. Calculate your monthly debt payments and expenses. Next, you need to calculate your monthly debt payments and expenses. This includes all of your debt payments and housing expenses, as we discussed earlier. Step 3. Determine your debt-to-income ratio. Once you have your monthly gross income and monthly debt payments and expenses, you can calculate your debt-to-income ratio. To do this, divide your monthly debt payments and housing expenses by your monthly gross income. The result is your debt-to-income ratio. Step 4. Determine your maximum monthly housing payment. Lenders typically use a debt-to-income ratio of 43% to determine the maximum monthly housing payment you can afford. To calculate this, multiply your monthly gross income by 0.43. This will give you the maximum amount you can afford to pay for your monthly housing expenses. Step 5. Calculate your maximum home purchase price. Finally, you can calculate your maximum home purchase price by using the maximum monthly housing payment you just calculated and plugging it into a mortgage calculator. This will give you an estimated maximum purchase price based on your income, debt, and interest rate. Calculating your maximum home purchase price is a crucial step in the home buying process. It's important to understand the factors that impact your affordability, such as your income, debts and expenses, and interest rate on the mortgage. By using the debt-to-income ratio, you can determine the maximum monthly housing payment you can afford based on your income and debts. This calculation will help you narrow down your home search and ensure that you're not overextending yourself financially. It's also important to keep in mind that the maximum home purchase price that you can afford is not necessarily the same as the ideal home purchase price for your budget and lifestyle. You may have other financial goals or priorities that impact your decision, such as saving for retirement, paying off debt, or saving for your children's education. In any case, calculating your maximum home purchase price is a helpful starting point in the home buying process. Remember to work with a reputable lender or mortgage broker to get a pre-approval before you start shopping for a home, and to consider all of the costs associated with homeownership, such as property taxes, insurance, and maintenance. By taking a careful, an informed approach to your home purchase, you can ensure that you make a wise investment that aligns with your financial goals and sets you up for long-term success. Buying a home is a major milestone in life and one of the biggest financial decisions you'll ever make. It's crucial to know what size mortgage you can afford before you start house hunting. By understanding the factors that affect your affordability and following the steps to calculate your maximum home purchase price, you can feel confident that you're making a wise financial decision. Remember, your income, debts and expenses, and interest rate are the main factors that determine how much mortgage you can afford. While it's tempting to stretch your budget to buy your dream home, it's important to be realistic about what you can comfortably afford. The last thing you want is to become house poor, where all your income goes towards mortgage payments and you're left with little money for other expenses. By following the steps we've outlined in this video, you can determine your maximum home purchase price and make an informed decision when it comes to buying a home. Keep in mind that this is just a rough estimate, and you should work with a trusted lender to get pre-approved for a mortgage and determine your exact affordability. Buying a home is a big investment, but with the right preparation and guidance, you can find the perfect home that fits your budget and your lifestyle. Good luck with your home buying journey. Thank you for watching today's video on how to calculate the size of mortgage you can afford. Remember, buying a home is a big decision, and it's important to understand your financial situation before you start shopping for a mortgage. By following the steps we outlined in this video, you can get a good idea of how much house you can afford and make a more informed decision when it comes to buying a home. If you have any questions or comments, please feel free to leave them in the comments section below. And if you found this video helpful, please give it a thumbs up and subscribe to our channel for more informative videos on personal finance and real estate. Thank you again for watching, and we'll see you in the next video.